applied the E tool and the time tool to the November 26th to November 30th upswing, we'll now apply them to the downswing. And you can begin projecting the future intersections as soon as a moving average turns. And you can use, remember, only a couple dots of the moving average to make a projection. So with a little practice, you can project fairly early, and if you update your projections as the scenario unfolds, you'll get quite skilled at projecting the intersections in the future. Okay, let's see how we'd apply it to the counter swing. First, we'd apply the E tool, and we'd go to, about the top of the counter swing. We'd go down to the intersection, and we could have projected this sooner, and click again, and we get a price level around 1460 that we're going to be looking for an entry into the next leg up, because we've established from the one dominant cycle price motion model that we can reasonably expect at least 2 swings on a trending move. And you can also apply the time tool to the counter swing. And to do that, you go to the counter swing start, move back in time to the first intersection that occurred before the counter swing, move past the start of the counter swing to the intersection or projected intersection, click again, and then try and get the cursor reasonably close to the swing or counter swing start point, and click again, and you get a high probability price and time zone that you can reasonably expect this counter swing to end. So you would be looking for an entry in this area here. Okay, now to look forward, you want to project the moving averages and make estimates of where the moving averages will intersect, so then you can use the E tools and the time tools to get a handle on price and time zones that you want to be looking to exit or lighten up on that swing. So we'll move to the regression tool, and we'll regress the green line forward. And in this case, because the green line was so close to the red line already, we'll project the blue line forward also. So now we have an approximate location for a proposed intersection, which you would then update as this move continued. You could then go to the E tool, go to the start point of this new swing, left click, go to the proposed intersection in this area, and get a price level that you'd be looking for this new swing to hit the wall. And you can also employ the time tool. Same principle applies. Here's the start of the swing. You go back to the first intersection before the start of the swing, move past the start of the swing to the proposed intersection or projected intersection, click again, and then click on the start of the swing. And we get a price and time zone which almost always corresponds with the E tool projection zone, where you'd want to be looking for this swing to hit the wall, to either lose momentum or reverse. So let's review just the 3 main concepts that we've covered in these 3 videos. One is that you want to uncover the dominant cycle and the time frame in which you trade, and we showed you 2 ways to do that. Number 2 is you want to clearly identify and classify trend, swing, and counter swing components within the chart you trade. Excuse me, because the way the Hurst method works is that you're always trading one swing at a time. The world begins anew with each swing. And then using the E tool, the time tool, and the regression tool, you want to constantly and continuously project moving average intersections into the future so that you can get a highly reliable price and time zone that you can look for a swing to hit the wall. Now, for me at least, the Trading 5's Hurst method provides the most comprehensive and the most useful description of swing trading that I've ever come across.